Treasury bill rates trended northwards despite a bearish market as investors weigh 2022 Nigerian Treasury bills as well as CBN Special bills. Chuka Nwachukwu, the head of fixed income trading at UBA, joins me now for a midweek wrap of Nigeria's fixed income market. Chuka, it's a pleasure to have you on the program. I have been reading about tightness in the money market, and in fact, I've been told that some banks have had to approach the central bank, repo window to get liquidity. Can you explain the liquidity dynamics in the market right now and why things are so tight?
Okay, the market has been pretty tight. We've seen increase in rates, especially overnight, and like you rightly mentioned, despite the fact that we saw about 680 billion came into the system by FAC. But then the market is still very tight, and then that also has played out on the Treasury Bills market today.
All right. I want us to talk briefly about what's happening in the investor and exporter window of the foreign exchange market, where we're seeing the Naira weaken to 425 or thereabout against the dollar. Now, tell us that story. What exactly is happening? Is that a reflection of very weak supply of dollars at the moment?
I wouldn't say it's a reflection of weak supply of dollar. I would rather say it's a reflection of a high demand in the system. That movement is quite significant. I mean, the last time I was here was last week Wednesday, and then it was trading around 420, and now between last week and this week it's moved about well over 5 Naira. So that's a quite significant movement, and I believe that is something that the CBN will have to address, and hopefully they address it very urgently.
Well, we certainly look forward to seeing how they would address it, because as you know, there is that pressure from the high cost of foreign exchange that is driving imported inflation, beyond, of course, all the other external factors that are driving that. But coming back to the money market, I wanted to get your thoughts about the outlook. As we move further into the second half of the year, there was that expectation that given the prospect for high inflation, that it was a no-brainer that we're going to see higher rates. So do you think that we're going to now see that climb in rates as we move further into July?
Yes, I believe so, especially with the illiquidity in the system. For example, today, the T-bills market, especially the special bill, traded from 6% to well over 10.5. I slightly touched 11%. So this, well, I would probably say because of illiquidity in the system. But going into the third quarter, like you mentioned, we see the movement in yield, especially on the bond side. We will see that because governments need to spend, the Euro bond thing, like I mentioned the last time, government has cancelled the Euro bond issuance. So they will really need to come into the local market to borrow, and when they do that, we'll see this high yield high movement in yield, but we might not see the 14% people are expecting.
All right. What about for the bond market? Do you anticipate a similar trend where we're simply going to see higher yields in bonds because the government will be moving that planned Eurobond borrowing back into the local market?
Yes, I do see that. We see slight movements, not as significant as we expect. We might see the longer end, maybe 2050, maybe between 13.5, 13.7. But I don't think we will see within the immediate future. We'll see the 14 levels people are expecting, and like you said, government will be looking into coming into the local market to borrow more in order to finance a budget deficit. So that will also add pressure on them. But again, if you look at the pattern of DMO, DMO, actually the current DMO regime doesn't really believe in so much in moving rate. They want to keep it as tight as possible and then to borrow as cheap as possible for the government.
All right. So let us get your forecasts how do we see yields moving over the next few weeks? I thought it was quite significant the point you made about the special T-bills now firmly in double digits.
Yeah.
Do you think we're going to see even a further rise from those levels?
I think we should just look at the next NTB auction. That will give us direction. The last one came out at 6.07 thereabout. So if the CBN, if DMO actually move that upward, and then we'll see the double digits like you mentioned. But I also think that CBN should also touch on the OMO. I mean, if they touch the OMO is currently at 10%, 10.1. If they do that, and then they will see the double digit you expect. But for now, I think we will see just maintain the level it is.